Hello and welcome back to Trading with CJ. Now today we're going to be talking about companies where their ex-dividend date is coming up very soon this month in June. So what does ex-dividend date actually mean? Well, it's kind of your deadline date into owning shares in that company and receiving the next dividend payout. If you buy shares in the company after the ex-dividend date, then you'll have to wait until the following ex-div date to be able to receive the dividend payout. So we're going to be covering 10 companies in this video. 5 of those are in the Ftse100, the UK market, and 5 are in the S&P500, the US market. But as you can imagine, there are quite a few going ex-dividend in June. So if you want me to cover some more in future videos, then let me know in the comments below. And one last thing before we get started, I'm not a financial advisor. This video is purely for entertainment purposes. So if you are planning on investing into the stock market, you should always do your own research first. So let's get into it. So the first company up is a company called Severn Trent, EPIC code SVT. It's a UK based company that trades in the Ftse100. And it's basically a water and sewerage company, as I said, in the UK, but it also does trade internationally. Its current share price is £25.23p. We can see over the course of the year it was growing quite nicely, then the crash happened, and then to be fair it's kind of gone back to where it was, so it's not doing too bad at all. It pays a nice dividend yield of 4.03%, which works out as about 60p per share. The dividend payout is quite high though, it's 150% dividend payout. So whether that dividend yield of 4% is sustainable or not in the future, who knows. But for now, it's a nice dividend payout. Simply Wall Street do have this company as overvalued by 28%. It's not the end of the world because there is potential, lots of growth in this company with a future return on equity of 21.8% in the next 3 years. So a nice return on equity, despite the fact it's valued at overvalued. So if we go down to its financials, it's got a profit currently of 8.61%, slightly less than previous year, but that's not too bad. At least it's in profit at the moment. But it does have high debt to assets of 88.49%, so that's quite high. But as I say, it does have a nice dividend yield of 4.03%, paying out 60p per share. So the second company up is Vodafone, EPIC code VOD. Now this is in the Ftse100 as well. It's basically a massive telecommunications company, kind of similar to like O2, EE, companies like that. We can see its share price is currently £1.35, and we can see over the course of the year it was doing okay-ish and then dropped, and it's still at quite lows from where it was. So there is that. It's going ex-dividend on the 11th of June as well, but it's paying out on the 7th of August, and its dividend yield at the moment is 5.84%. This company its analysts have valued it as 65.5% undervalued, so massively undervalued, despite the fact it has been dropping. This company though is currently unprofitable, so there is no PE ratio. So it's kind of hard to do a full in-depth analysis because there is no PE ratio for this company at the moment. Its forecasted future growth is 27.2% in the next 1 to 3 years, so that is a massive percentage growth, although there is a low return on equity in the next 3 years of 5.5%. So there is that. If we go into their debt, as I said already, they are unprofitable, so it's minus 2% profit margin at the moment. It was also dropping last year, and it's had a rise in debt, this company, for the last 2 to 3 years. Its balance sheet is only 63% debt, so it's not too bad. It's fairly high, but as I say, it is, as you can see there, it's rose from the last couple of years. So it's not too bad. The balance sheet is definitely not the best. It is a negative in terms of profits. Its dividend payout is massive. It is negative minus 288% payout ratio. So I'm surprised this dividend yield wasn't cut at 5.84%. You know, there is that in the future, but at the moment, because it's unprofitable, the payout ratio is minus 288%. So moving on to our third company on this list, and it's another UK stock, and that is Freelase Group. So Freelase Group is an investment company based in the UK, and it basically has two businesses. It's got a private equity business and an infrastructure. Infrastructure is also a separate stock. So this one is EPIC code III for Freelase Group. current share price is £8.94p. It's going ex-dividend on the 11th of June as well, and it's paying out on the 17th of July. It's paying quite a nice dividend there of 4.08%, which works out as 17.5 pence per share. So it's not too bad. It does have a high dividend payout ratio, once again though, of 158%. But you can see here from the graph, the 1 year it was doing fairly okay. The crash again started to recover. But if we look at the all-time, this is what I like to see. It has been growing each year, growing year on year. And if we scroll down a bit further here, profit margin of 92.64%. That is a massive profit margin. And the debt as well is very good. Look at that, 9.45% debt to assets. So that is also nice to see. And its debt to equity ratio is also only 7.4%. This company is undervalued by Simply Wall Street at 52%. So you're getting this at a really bargain price here, according to analysts, at 52%, with a future growth in the next 1 to 3 years of 63.3%. One last thing to mention on this that I do really like is in the last 0 to 3 months, £1 million worth of shares have been purchased from insiders. So that is great encouragement right there. If insiders are buying their shares, good for potential investors anyway. So 3i Group, 4.08% dividend, going ex-div on the 11th of June, paying on the 17th of July. So our next company is Gilead Sciences. So Gilead Sciences is a US stock. Its ticker symbol is GILD and it's in the S&P500. It's basically a biopharmaceutical company which is developing and discovering medicines. It is massive in the US. And as you can see here, its share price is currently $74 and it's gone up since this virus died because of its massive part that it's playing with it. So at the moment, its share price is doing very well at $74. Although according to Simply Wall Street, it's still undervalued by 29%, so that is massive. It's going ex-dividend as well on the 11th of June, and it will also be paying out this month on the 29th of June. As it's American, it will be paying out in dollars, so it's going to pay out 67 cents per share. Its dividend yield is 3.62%, which is a nice dividend yield, and it's well covered because its payout ratio is only 66%. So dividend yield is pretty sustainable in my opinion. If we look at its balance sheet here, profit margin of almost 24% there. That's very nice. And debt to assets of 63.45, which is also not too bad at all. For a company of this size, this balance sheet is pretty good. Another thing is it also holds £21 billion, or dollars I should say, in cash, which is massive. So it's a fairly good balance sheet with a nice dividend payout ratio. Its future return on equity is predicted to be 23% in the next 3 years. So that is GILD, Gilead Sciences. On to our fifth stock, which is Coke, or Coca-Cola. So Coca-Cola, ticker symbol KO, is another US stock in the S&P 500. I think we all know what Coca-Cola is. It is basically a beverage company. And it has been growing year after year. Look at that. So yeah, there's our dips here and there, but on average, this company has just been growing. It's been massively affected at the moment with the share price dropping there from February of was about $50, $60, and now we're at $47. It's going ex-dividend on the 12th of June, and it will be paying out on the 1st of July. Coca-Cola is a very good dividend payer, as we all know. It's paying out a 3.49% dividend yield, and it's been paying that dividend for more than 10 years. So it's very good. It's a very good dividend payer, and its payout ratio is also only 69%. So that's pretty good as well. It's had very good earning and revenue history over the last 3 years, with a future return on equity scheduled to be 50.7%. So that is a very good future return on equity. Profit margin is 23.94%. So it's making quite a nice profit. One thing about this company though, it does have quite a high debt, 78% debt to assets, and its debt to equity ratio is 254%. So that's quite high. But as we know, not all debt is bad. This company has been growing year after year. It's been growing its earnings and revenue, and it's continuing to pay a dividend. So 3.49% dividend yield, paying out on the 1st of July, ex-dividend on the 12th of June. The next company on this list is DTE Energy. So DTE Energy, ticker symbol DTE, is another US stock. It's also in the S&P 500. And the clue is in the name. It's a massive US energy company. Currently trading at $113 per share. It's going ex-dividend on the 12th of June, and it's paying out on the 15th of July. It's got a nice dividend yield again of 3.74%, which actually works out as around $1.01 per share. So that is actually quite a nice dividend yield, dollar per share. It's had very good growth over the last few years. If we look at this, all the way from 2014, just continuously growing. It's obviously dropped a bit due to what's going on. However, it is currently actually overvalued, according to analysts, at 18.5%. That dividend yield of 3.74% has also been growing over the last 10 years, and it's got a nice payout ratio of 66%. So a very good payout ratio and a growing dividend company. So if we look at its balance sheet here, its debt to assets of 72% and even a higher debt to equity ratio of 144%. So fairly high debt on this company at the moment, not necessarily the end of the world, but it is paying a nice dividend of $1 per share. That is DTE Energy. The seventh company on this list is Tiffany Co. So Tiffany Co is a US stock, EPIC code TIF, also in the S&P 500. And basically, through its subsidiaries, it designs and retails jewelry and other items. Now, this is going ex-dividend on the 19th of June, and it's paying out on the 10th of July. It's got a nice dividend yield again, or fairly okay one actually, of 1.81%, which is about, it's obviously in dollars again, so 58 cents per share. So that's not too bad at all. Its dividend has actually been growing over the last 10 years, and it's got a fairly low payout ratio of 51%. So that's nice to see as well. But let's just take a minute to look at this graph here. If we look at the last month, look at this. Even the last week, it has just dropped ridiculously. Last month, even 3 months. This is one of the lowest it's been all the way since 2019 there. A company was meant to buy this recently, but that deal has sort of kind of fell through, or they're pulling out. So all shareholders have basically sold up and kind of got out of there. It was ridiculously overvalued, actually, at 256%. I've not seen an overvaluation like that, really. It's got a high PE there as well, 28.88%. Not percent, sorry, 28.88. But comparing to the industry of just 12.8. So very high PE ratio and a very high valuation as well for this company. It's forecasted negative earnings growth in the next 1 to 3 years. So that's not great. Not to say that it can't bounce back. Well, one good thing about this company, though, it does have a good balance sheet. It's got 12.23% profit margin and 50% debt to assets with 30% debt to equity ratio. So its balance sheet is pretty healthy. It's paying a dividend of 58 cents per share. But in terms of its potential growth in the future, it's question marks over that at the moment. But that is Tiffany Co, ex-dividend on the 19th of June, paying on the 10th of July. Up next, the 8th company on this list is Experian. So Experian, EPIC code EXPN, is a UK stock, and it's in the Ftse100. It's a global technology company, and it provides business data and consumer service. It basically helps to manage your financial positions. Its dividend yield there is 1.36%. It's going ex-dividend on the 25th of June, and it will be paying out on the 24th of July. That's going to work out around, it's in cents this one actually, so it'll be about 32 cents per share. So that's not too bad, and its payout for the dividend is actually 63%, so pretty good. If we look at the chart for this one, in the last year, it's kind of back to its highs almost to where it was. And if we look at where it is all time, it's actually kind of at its highs right now. A growing company, as you can see, and that's always nice to see there. It's forecasted to grow another 13% in the next 1 to 3 years. Wall Street do have this overvalued at 83.3% though. As I say, once again, it's a growing company, so the share price is going to be quite high for this one. It's got high PE actually as well, 39 So fairly high PE, not the worst, but a fairly high PE there. And its future return on equity is projected to be 28.5% in the next 3 years. So that is very good future return on your equity there. If we look at its balance sheet, we're in a 13% profit margin, which is kind of consistent to where it was the last few years. The debt is fairly high though, 74%, but it has had rise in debt since 2019. So that is Experian. Nice dividend yield there of 32 cents per share, and it's a growing company. So on to number 9 out of 10, and the next one up is United Utilities. So United Utilities Group is a UK stock. It's in the Ftse100. Its EPIC code is UU. It's basically a water and wastewater service in the UK. Its dividend yield is currently 4.61%, so quite a high dividend yield again. It's paying out 28.4 pence per share. Going ex-dividend on the 25th of June, paying on the 3rd of August. If we look at the chart for this company, in the last year, it's kind of been doing okay. It did grow and then the crash, and it's kind of gone back up again. So it's not been doing too bad at all. And if we look at over the maximum courses since 2013, been a bit up and down, to be honest, but it has been growing since 2018. And it does have a high PE though, actually, of 50.87. So that's quite a high PE. Its dividend yield, as I said already, is 4.61%, and that's been growing actually over the past 10 years. So that's pretty good to see there. If we go into its balance sheet here, its debt to assets, 78.91%. So fairly high debt, and if we actually debt to equity ratio is actually 280%, so that's not good at all. 280% debt to equity ratio. Not all debt is bad, but at 280% is fairly high. The dividend payout as well for this company is something to mention, because it's 4.1%, but the payout actually ratio is 272%. So once again, probably not sustainable in the long run unless things change with this company. But at the moment, they are paying that dividend yield, and you're going to get about 28p per share. So the last company on my list is Stryker. So Stryker, EPIC code SYK, is a US stock. It's also in the S&P500. It's basically a massive medical technology company in the US. It's going ex-dividend on the 29th of June, and it will be paying out on the 31st of July. Its dividend yield is 1.17%, which is going to work out around 57 cents per share. And that dividend has actually been growing over the past 10 years. And it's got a very, very good payout ratio of just 38%. So that's very nice to see as well. It's a growing company. If we look at here, this is a graph. This is what I like to see. Companies like this just growing year on year. It's very good. It's not far off its highs, to be honest, there. And in the next 1 to 3 years, it's scheduled to have another 24.2% growth. So that's very nice to see. So if we scroll down a bit here, the PE actually is 28 PE ratio, which isn't too bad. It's fairly high, not the worst one we've seen. Profit margin of almost 14% there. Obviously, so slightly down on 2018 as well, but that's quite a nice profit margin, to be honest. And a debt to asset ratio of just 57.55%. And its debt to equity is 80%. So it's also not too bad. So that's Stryker. That's the last company on my list. Dividend yield of 1.17%. So there we are. That's just 10 companies there that are going ex-dividend this month in June. Let me know in the comments if you hold any of these companies, or maybe you're planning on buying into some of these. Also, let me know if you want me to cover some more in future videos. So that's it for today. If you found this useful or interesting, please hit the like and subscribe to my channel. It's very much appreciated. Thanks for watching, and until next time,